let's hear from Dharmakirti Joshi. He's chief economist at Crisil, and he joins us now from Mumbai. Dharmakirti Joshi, what do you make of these GDP figures?
Well, I think they are quite optimistic given the overall global scenario, rising interest rates. I think they are slightly higher than what we had estimated. We expected around 7.5% growth. And I think the most interesting or rather encouraging part is that the investment activity seems to have picked up. I mean, as per this data, which was almost flat in the last quarter of 2010-11. So I think some rebalancing appears to be taking place with investment activity picking up, and I think that's the positive sign in this data. The worry to me is the poor performance of mining and construction. Mining sector not doing well has implications for power sector, and I think it can become a constraint for other manufacturing sectors as well. So I think that's a bit of discouraging news. And construction activity has actually fallen very sharply, and I think there it seems the impact of interest rates is beginning to show up.
Sorry to interrupt you. You really think that those interest rate rises, we've had so many over the past 18 months or so, that they are starting to hit home? Are they really starting to win the battle against inflation, though?
Well, I think the battle against inflation will not be won by rising interest rates alone or compressing demand. I think there needs to be an adequate supply response, because the major cause of inflation is a supply bottleneck. It's also very high levels of global commodity and crude prices, which we saw in the last quarter. They're moderated, but I think going ahead, the critical factor driving inflation down would be where do global crude and commodity prices settle, and do they sustain at lower levels or not. Without that, I think the inflation is going to be a major problem throughout this year. Even the central bank now expects that by March 2007 it will come down to close to 7%, which is much above their comfort level. So inflation is going to remain a sticky problem. Yeah, I think what the monetary policy is doing currently is trying to slow down the demand. So it is restraining the impact of high crude and commodity prices spreading to other sectors of the economy. So I think basically the second round effects of supply shocks are being curtailed. Beyond that, I think the monetary policy has very limited ability to tame inflation.
Well, it's very interesting, isn't it? Because the Reserve Bank of India has raised rates 11 times since 2010. Those increasing borrowing costs, just what effect are they having on businesses in India?
Well, I think it is going to trim the profit margins of the companies, because they were already reeling under the pressure of rising raw material costs, rising fuel costs, and I think now and they were passing it on to the end consumer as long as the demand stayed healthy. With the interest rate hikes now biting into demand or slowing down the demand, what we will see is that the ability of the manufacturers to pass on these costs to the end consumer will get limited, and as a result, they'll have to take a hit on their margins. So we should see margins under pressure going ahead.
Okay, Dharmakirti Joshi, really good to talk to you. Thanks for joining us live from Mumbai.